Hey everyone, how's it going? Good to see you guys. Let me see, I'm make sure my chat is on. Hey Kay, how's it going? All right, so as you guys know, the only real official place to get any sort of message from me is from my public Telegram. That is tradingpub.com/Kane if you want to join that. Anything that doesn't come from that channel is not from me, so don't get scammed. There are people who are using my face, using my video, image, likeness, and my voice to try to scam people. So don't fall for it. The only place you'll hear from me is on this exact YouTube channel and the Telegram channel that you can sign up for at thetradingpub.com. Anything else is not from me, I promise you. Okay, so, or unless you email me, kane@investpub.com, and I reply to you. All right, SPY killed you today. What happened, Dan? So SPY, well, my guess of what might have happened is that we opened at a new all-time high and then we started trading down lower. So if you caught my Telegram message, so what maybe one of the benefits of joining that Telegram is this morning or every morning I do give you levels. And so before the market opened, you can see about 22 minutes before the market opened, I did warn everybody that it looked like we were going to open right at a very important gamma level in the SPY, which was 640. We opened a little bit below that, but since that was such a important level in the gamma exposure, I said that the chances were that there was going to be a big reaction from it. And if we started selling off in Microsoft or Meta, that could lead to a rejection of that 640 level downwards. And that's basically exactly what happened. Later on, I updated. It still looked like there was a bounce between 635 and 640. The SPX really only showed it on the upper end, but we did start trading lower in the day. Let me see if I can find. So we did kind of float around in that 640 area and then come down. We came down to that 635, and then later in the afternoon, we actually broke that 635. We went down to 631. We did see in the last 10 minutes, I didn't bother updating because there's only 10 minutes left, that gamma shift from 635 all the way down to 631, and we closed around 632. So right now, it's flat, and we're mostly flat, but we are waiting on those Apple and Amazon. Maybe they released. Let's take a look. Amazon, I think, for sure already released. So if we take a look at Amazon down quite a bit post-market. So down, what is that, almost $7, maybe 0.3%, not too much. Okay, so 7 divided by 234. Yeah, only down about 3%. That's not too bad. I wouldn't go nuts because of that. And then we have Apple. See what they. Okay, Apple is balancing us out so far. So up on the Apple news, again, not too much, $2, a little over $2 on a $207 stock, and then down for, what was it, $7 or so on Amazon. So they're somewhat balancing each other out. We see that in the SPY post-market is barely moving, but it is down somewhat. So the danger is that we continue to get more information, we continue to go through their earnings calls and sentiment changes, and the risk is a little bit more to the downside with the initial move in Amazon outpacing the initial move upward in Apple. So in a lot of my services, I kind of warned about that. There's a potential for big overnight moves or something like what happened today where you had that gap. You had a gap today and then it completely reversed directions. So what we've seen all week is this pattern in the S&P 500 where, let's start on Monday. Where's Monday? Monday. Oh, we're Monday. Start at a high, go down to the low. So that was, I'm not sure if it was an all-time high, but it was pretty close to it. Several of these days were all-time highs. So high, close on a low or closing lower. Not quite, this one recovered at the very last few minutes. But here, start at a high, close near the low. And then here, start at not quite the high, but close just reversed. But we did go quite a bit lower. Today, high, closing at a low. So this is a pattern that we've seen all week long. It is not a very bullish pattern. It's not something to be really super optimistic about, but we do keep hitting those highs. Today, this time, tomorrow, by the time tomorrow, when we get through digesting all of those earnings, it's possible that we're down lower and closer to that EMA 20. The other thing that we talked about yesterday is how we tagged that EMA 8, and we were hoping for this, actually this bar, except green. If this was a green bar instead of a red bar, that was exactly what we were looking for a bounce up in the S&P 500, getting to the 645, 650 areas, which we do see gamma levels, and we do see some positioning in the options market for people who are optimistic, enthusiastic about the markets. Those levels are still there, but now we have many levels at 625, 620. We're having exposure through a wide range of strikes above and below now, not just above. So that could mean a pullback, tagging one of those levels, then going back up. It could be the reverse, tagging one of those levels on the way up and coming back down. Those levels, when they have large concentrations, they do tend to get visited. So we could be in for some volatility. We could be in for some pretty big moves in the markets in the near term. And so we should just be prepared for that. And, we've been talking about it. We see ATR has been super, super low. We talked about that last week. Now just starting to expand and go upwards. We talked about that in the context of my Maverick indicator with VIX, where that VIX was starting to, the implied volatility on the VIX was starting to tick upwards. And we can see that we were down at 15. Today we're closing around 1671. The high today was 17. So we are starting to see signs of that expanding. And that just means even more volatility in the markets than we have been seeing. So realized volatility has been quite low in the S&P 500, but that implied volatility has been high. And I talked about on Profit Panel today how those two had to resolve themselves. One of them will go to match the other. And so far it is looking like that the market makers got it right. And more likely, it is going to be the realized volatility that moves up to match the implied volatility. So we can expect larger swings. That means we got to be careful. We can't set tight stops. We probably want to set easy to attain targets. So your reward risk ratios, if you're trading directionally in this market, they're going to be low. They're going to be low. So either you're going to be at par or close to it, or you're going to have higher risk than reward in your trades. And you just have to know and understand that and realize if that is something that you're okay with, that you find acceptable, and you have a way of dealing with that. Do you have a way of mitigating that risk, or is your edge strong enough to withstand that risk so that over a series of trades you can still be profitable? Right. Let's see what you guys are saying. SPY and SPX killed you guys. Okay, well, unfortunate, but based on what the comments that I made in the morning, hopefully that maybe you missed them, or hopefully at least it helped prepare you a little bit. Let's see. Apple and Amazon earnings. Yeah, the levels are super helpful. Okay, great. Thank you, Richard. 640 is an iron wall. Well, today it did prove very, very strong, yes. My levels are usually spot on. Today blew way down past 635. I thought for sure it would go back to the 640, 635. Yeah, in the last 10 minutes they shifted. The exposure shifted even lower, which means that in the last 10 minutes there was a lot of movement in repositioning of those options down lower. And again, that is not a positive sign. But we're not talking like, oh, let's panic, let's short the market type of deal. What we're saying is now it's just more likely that we're going to get that pullback to the EMA 20. And that's not a big deal, right? So on the way up, we've seen a tag of the EMA 20 right there. We saw a tag right there. Then it went right there. And here we got kind of close over here. And so a tag in the EMA 20 is not a big deal. And when we tag that EMA 20, the tendency, not guarantee, but the tendency is for that EMA 8 to curve downwards. And if that's what happens, guess what? What do we always talk about in these afternoon sessions? We always talk about, where is it? Let me do it. There we go. We've got the EMA 8. Okay, if it does that, which it's starting to, if it can bounce, right? If it bounces off that EMA 8, then what you have is that longer term trend of the MA50 and a reversion of the short term to the longer term trend. That's a great entry point. So it's not time to panic. It is just time to say, hey, I should have my powder dry, which is what we've been talking about for 2 or 3 weeks now. I shouldn't have a lot of long positions. I definitely shouldn't have short positions. So I should be available to take advantage. I should have cash available to take advantage when we see something like this. Now, are we guaranteed to have that? No. That does seem to be the most likely scenario right now, but this could turn down like this. We could go through the EMA 20, and then what we would look for is a bounce off of the MA50. And if we get a bounce off of the MA50, then at some point, both the EMA 8 and the EMA 20 will revert upwards to match that MA50, and that'll be an even stronger, longer term trend upwards. So that would actually be really positive for the market for the rest of the year. And then of course we have the kind of doom and gloom scenario that a lot of people will try to fearmonger you into, which is the break of that MA50. And then we would go to the MA 200 and then most likely bounce further. At this point in time, there's no forces in the market that make me believe that we would break below that MA 200. And I can say the same thing about that MA 50 right now. There's nothing on the horizon that says, oh my God, we could go down to the MA 50 and break it. Is there a chance of breaking the MA 20 and visiting the MA 50? Very small. Not impossible, but very small. And again, that's just what we can see right now. Who knows what's beyond the horizon? But right now, that's not something we need to prepare for. You know, a few nights ago, over here, we had that earthquake in Russia or near Russia that created the giant waves everywhere. And all the way over here in California, we got the tsunami alerts. And so basically we say, oh, we see these waves coming on the horizon. You just prepare yourself a little bit. But we never saw it get up to the point where we were being warned for floods. So I wasn't afraid of floods. I was watching the warnings or watching the alerts to see if it would be upgraded to that, but it never manifested, right? So there was no reason for me to say, oh, let me move my family to inland. Let me start uprooting everyone. There's no point in doing that because on the horizon, there's nothing that indicates that I should be doing that. So same thing right here in the markets. On the horizon, there's nothing to indicate that I should be preparing for a break of that MA50. And there's very little to suggest I should be preparing for a break of the EMA 20. So there's no point in speculating about that or being fearful of that. And if I'm really fair, if I have got a lot of money, like a huge portfolio to protect, then I do a tail risk hedge, maybe buy VIX put or VIX call or something like that to hedge my entire portfolio. But right now, there's not a huge need for it right now. Okay, so we're not talking about everything's going to go bearish. We're not saying that we're going to get this major pullback. If we go from right here, right from where we closed, down to the EMA 20, we're talking about a less than 1% move. If we go down to the MA 50, we're talking about a 3%. That's on the mild end of a pullback. Okay, so even if we get a 5%, that's halfway to the MA 200. That's not bad. It's not a bad result. And the 5% actually would be supported right here by this horizontal over here. Look at how much support there is all across over here. Previous all-time highs that were very difficult to break through are at right about 5% down. Okay, so there's no reason to panic. There's no reason to think that we're going to have a change of trend just yet in terms of the longer term. So if we're looking at the MA50 or anything longer in order to determine our trend, there's nothing indicating right now that those are going to change. So for now, those are beyond the horizon. So there's no preparation needed. So we're right now, what I'm preparing for is maybe a pullback to the EMA 20. But what I'm really looking forward to is that movement of the EMA 8 back upwards, or an EMA 20 that curls down and then moves back upwards. And so I can start deploying my cash that I have on hand and start investing into the stronger sectors in the market at that time. What are those sectors going to be? I don't know. I can't see that far ahead. Okay, so I just have to wait and see what those sectors end up being. All right. So my comments were good. Just got in before I made the adjustment. Yeah. Okay. All right. So nothing to be super fearful about. Just be prepared that maybe we'll come down a little lower, especially given the kind of mixed news in terms of the earnings that we've gotten so far. Tomorrow morning, you also have the employment situation report, and we have the consumer sentiment, I believe it is. Always mix up sentiment and confidence. Yeah, sentiment. So sentiment, if we already got confidence, sentiment's not going to really do much. And then we've got the employment situation. Employment situation really hasn't changed in a long time, so I'm not really expecting any surprises there. So normally what happens is a volatility collapse, not a huge one, but a baby volatility collapse in the S&P options after the employment situation is released. So that's a plus. That volatility could come down a little bit after that report is released. Usually it's at 10 a.m. Eastern. Let's just see if it says 5:30 Eastern. Or sorry, what am I? 8:30 Eastern, 5:30 my time. Okay. So the other thing that I'm looking at and noticing is this NAAIM report. So we did break 80. Not hugely, but we are down at 76.85. We just got this number today. This is as of yesterday's reporting by all of the professional investment managers that are part of this association. And so we do see that coming down. I did tell you guys over the last 2 weeks that if I saw it break 80, then I would be preparing for that pullback. And it looks like I didn't get the data and the actual breaking, the potential beginning of that pullback. You know, the timing is good. So now that I see the NAAIM, I see those professional investment managers going more or leaving the equities markets a little bit, then that is another confirmation that we're probably going to have at least a tiny little pullback here. So EMA 20, maybe to the previous all-time highs, that would be appropriate for this pullback at this point in time as far as we can see. All right, so there's not going to be a huge point in taking a look at all the sectors, but I might as well, because really it's just a little market-wide. I can't even call it a sell-off, right? We have to take this into context. What happened today is we opened at an all-time high. That indicates a strong market. And then there was profit taking. There was like, oh, we're all-time high. It's a good time to take some money off the table. And so we came down, and all we did was just come down a smidge below that at EMA 8. So if I go close to close, then the change is only 0.38%. That's not a big move, right? This isn't panic mode. Even if I go from high to low, that high is 39.85. We'll call that 640, and then we ended it at 632. So that is a 8-point range, which is almost 2 ATRs, maybe 1.7-ish, 1.8 ATRs. Okay, that is a little bit of a big move, but from close to close, it's nothing. It's down 2.38%. That's half an ATR. So this is a normal move, but we do have to take the context and say, okay, well, all week long, we've been opening near the highs, and several of them were all-time highs. and then closing near the low. Then we go back up and we close near the low. Now we have a candle that spans a larger range than the entire week before it. Okay, so this is an engulfing candle. If I look backwards, normally you look forwards. If I look backwards, that's an engulfing candle that spanned the range of this candle, this candle, this candle, this candle, this candle, and not quite that candle right there. Okay, so this is a bigger move. And that tells me that there could be, and we did get volume at the end of the day. When we were looking at this intraday around 2 p.m. Eastern, 2:30 p.m. Eastern, this looked like more like a normal day. So we did get quite a bit of volume at the end. And what was the price action like at the end of the session? Well, it was this. Okay, so that is also not the most positive news. But again, it just increases the likelihood, the probability that we're going to see that pullback, maybe or probably to the EMA 20. Right. And then we'll see. If we get there, then we'll see if it goes even further than that. All right, but at this point in time, I'm not anticipating a break of the MA 50. Okay. Where do I get my news during the day? It just depends. I don't generally. I'm not generally day trading, so I don't look at the news intraday. If I was day trading, then I would pay for a quality news service. A lot of people like Benzinga, and there's a few others. So for me, because I don't run a day trading service, I do day trade a little on my own, but I'm not super heavily reliant on news. So I just go through a news like this on Thinkorswim, or I'll rely on TradingView and click on these little things. Okay, so I know a lot of people think that news is important in the markets, but the effect of most news is extremely limited. And large news tends to only affect a market for 2 or 3 days. And then whatever was happening before, resumes. And so it's as if that news didn't even happen. It takes a tremendous chunk of news in order to actually move markets fundamentally. So COVID was a fundamental, right? So if I look at 2020, this was an excellent uptrend, and the COVID news completely broke it. Right? That is rare. Almost never happens. What is more likely to happen is something like what happened with Newmont, which over here, we got a piece of news, which is a switch of their CFO, I believe. We got one crazy down day, 3-4 days to recover, and then it's just continued to do whatever it was doing. All right, so don't put too much credence into news unless you're trading in the very, very, very short term, because that's where news mostly shows up. It's in that short term. Earnings are a little bit different because earnings are the fundamental evaluation of a company. And earnings are used to calculate and project forward into the future value of a company. So earnings do have the power of changing a trend and changing a direction. So I don't know if we got any good examples of that. Is there anything that crashed lower on news? Coin is today. So you see that coin earnings, it's looking like it'll open down maybe here at 357 if this level stays like that. But if that happens, then it's in an area of support. And so that's not a break. So it takes some pretty extreme news. It's got to be really, really, really fundamental to the business in order to completely change the direction of a stock. So basically what we would be saying is, if earnings were so bad that Wall Street decided that the future value of the company was just way down. Maybe, so most of the time I think that, for example, if I said before earnings, we thought that the future value was 500. And then after earnings, we think it's 480. And so it takes a little bit of a dip. Well, that's still above where it is right now, right? We still think that Coinbase is a good business. We still think it's going to grow. We still think that there's value there. But if after earnings, for whatever reason, we said, oh my God, this thing, we don't think it's going to 500 anymore. We think it's going to 300. Well, then this would gap down and keep on trading down. That'd be different. But it takes, I mean, for Wall Street to suddenly change its mind like that, it's got to be super, 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 super negative news. Okay. So COVID was something like that. Oh my God, we're going to shut down the government for the entire country for a couple weeks. No one's going to be able to leave their home. No one's going to be able to spend any money. No one's going to be able to go to work. That is pretty big. And then it drags out for a few months, and then it drags out for 2 years. That is a very, very large effect on the fundamental markets themselves. So that's why that type of news can have an impact. But normally day-to-day news, whatever stuff, is mostly just noise in the markets. Unless you're in the very short-term time frame. You're trying to scalp, you're trading in the 5 to 10 minute time frames. Not in the intervals. I mean, like you're in and then you're out in 5 or 10 minutes or 20 minutes or 30 minutes. To get news, I just, right here, the little lightning bolt, wherever you are. And it's generally going to be on today. Okay, so if Coinbase news, I click on that little lightning bolt. It tells me about their earnings and a couple other things that happened. Okay, something about the SEC chairman. All right. Okay, so yesterday we talked about the potential TJ Maxx trades leading up into earnings. So we see that today it kind of broke down below our stop loss level, assuming that we were going to go into a long call. And so that would have negated all 3 of our trades already. So we can keep tracking it. If we get a little bounce in the markets, then we could say that those trades would still be live and still good. But just so you guys know, if those were real life trade examples, then I would never even enter them today because of what was going on in the market. If we get a bounce, then we can reconsider. If we bounce right back into near this purple line, then we could reconsider those trades. Yeah, you're very welcome, Carla. Okay. So right now there is risk in the market. That's my main conclusion, just by everything that we talked about so far. Is it huge risk? No. Right? Pullback to the EMA 20 is not a huge risk. Like I said, we're less than 1% away from that EMA 20. But it means don't go into any positions right now. Why would you? If you're anticipating that it's going to come down to the EMA 20, well, you're not going to take that short. That's less than 1% away. We are still overall in an uptrend. There's no point in taking anything short right here. And we're not going to take a long because you'll get better entries if we can bounce off of that EMA 20, or you wait for that EMA 8 to curl back up like we've been talking about. So we have expanded volatility as well, expanded price range from today. And we have increasing volatility as seen in my Maverick indicator. We see VIX increasing, and we also see the implied volatility of VIX increasing. We might as well throw in VXX or VIXX. I spelled that wrong. VIXX. Okay, so that's basically the speed of movement of VIX, and you can see that that's up a little bit also. So everything is looking like expansion of volatility. It's larger price movements, larger risk in the markets. So you want to make sure that you're being very careful. Large volatility also means larger opportunity, but larger risk. So if you want to play during that time period, what you do is some people get greedy. Okay, so if I normally put in $1,000 in a trade, then and then I can make, just say on average 50%, And then now if I put in $1,000 in a trade, maybe I can make 80, 90%. People will say, okay, I'm going to put the $1,000 in trade and maybe make 80, 90%, but my win rate is lower because that fluctuation is larger. So the best way to think about it is if I put in $1,000 and I normally think that I can make $500, okay, well, now instead of putting in $1,000 and chasing $800 or $900, I'm going to reduce my allocation and still chase the same $500. Okay, so instead of entering $1,000, then I could take my what am I doing? So I want $500 divided by 0.8. Okay, so instead of putting $1,000 to work, I will only put $625 to work, and so I potentially make the same amount of money, but I risk a lot less money in order to make that same amount. So I see a lot of people go into a high volatility environment and they have their same allocation or even a larger allocation, because what they'll do is that they'll average down. Oh my God, it's swinging so much. Oh, it's even a better entry or whatever, and they'll put good money after bad money. And so they end up with these really large positions that are at higher risk because of the volatility environment that they're in. And then that's how people start losing big and start destroying, coughing back profits, or God forbid, blowing up accounts. So just know, it looks like we are going into an expanded volatility environment, and be careful. Be careful with your risk allocations, and pick your entry point. And pick your entry point better, which means waiting for that pullback. Sounds about right. Okay. So because of that expanding volatility environment, and the fact that we're probably not done pulling back, I don't have evidence of this being over. Meaning, and what will my evidence of it being over be? It'll be a confirmation bar, like we talked about. Like if this today was a green bar instead of a red bar, that would be a confirmation of a bounce off the EMA 8. But we didn't get that. It's a red bar. So that means there's still a chance and a pretty good probability at this point in time of us moving down and touching that EMA 20. So if we touch the EMA 20 and then I get that green bar where the close is above the previous day high, or at the very least the previous day open, that's my confirmation, right? And is it perfect confirmation? No. Could it still break down below that just because we got a confirmation bar? Absolutely. But the confirmation bar increases the probability that the bounce is true. And that's what we're looking for. We're just looking for an edge. There are no guarantees, okay? So that's what I'm waiting for. Either I'm going to look for that confirmation bar, or I'm going to look for a series of bars together. Another way of saying that is I'm going to wait for that EMA 8 to curl back upwards. And so that might not happen over the course of one bar. It might be 2 or 3 bars. But if I add up every time, guaranteed, if I add up those bars, so for example here, this pullback to the EMA 20, technically this was a confirmation bar. See, we closed above the previous day high that bounced off of the EMA 20. So this could be taken as confirmation, but just say it didn't. Just say it closed below that EMA 8. And then this one went way up above it. But if I smush these two candles together, if I go to a 2-day time frame, can I do a custom time frame here? 2-day, custom interval, 2-day. Nope. Oh, it already exists. It already exists. Oh, there we go, 2 days. So this was the 23rd of June. So if I look at the 23rd of June, see, that definitely looks like a confirmation candle. So I can smush days together and they'll end up being, it was just a slower confirmation, right? It didn't happen in a single day. It happened across 2 days, okay? So you have to be aware, because sometimes candles, the candle that you're looking for, it gets broken up across time. And so you might not visually recognize it. But if you can either change the interval like I just showed you, or if you can mentally smush those two candles together, these two candles together, then you will be able to actually see a lot more patterns inside of the market than you would otherwise. Yeah. Okay, so we're going to end it there because now is not the time to look for opportunities. Now is time to wait until it is a good time to look for opportunities. Okay, any questions? Anything you want me to go over before we sign off? It looks like we have a pretty big delay, so I'm going to wait awkwardly for 10 or 20 seconds. Okay, so not seeing any questions come in, so we will end it there. Have a wonderful rest of your day, and I will see you guys tomorrow.